Welcome back to another episode of Not Financial Advice. This is Sean, and today we're going to be starting with a question. What if you could invest in a company set to benefit from either man made or natural climate change? A company that would benefit from future cuts in interest rates, which are expected this year. What if you could invest in such a company that had returned about 28% over the last 5 years, trouncing the S&P 500? That's the question for today's video, and the topic is going to be Pool Corp, ticker symbol POOL. And as we can see here, Pool Corp is down about 35% from its all-time highs. And so we're going to get into taking a look at this company and getting an idea of what Pool Corp is worth by using a rough DCF estimate to get a fair value for the price of its shares right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
All right, don't forget to like the video and subscribe to the channel. Today is Wednesday, January 17th, 2024, and we have just about an hour and a half left in today's trading for the US stock market. Update on my portfolio for today, I'm down 0.81%, where the S&P 500 is down the same amount, but the Nasdaq is down 0.96. The Dow Jones is down a little bit less than 0.5%, but small caps are suffering today with the Russell 2000 down 1.22%. And so definitely a rough day in the market, but here at Not Financial Advice, we start off most videos in doing a review or an update on my entire stock portfolio. And so you're able to see 100% of my investments every time. And I do have a pretty diversified portfolio here. So to get an idea about what's moving the market today, we can take a look at my top 5 gainers and decliners on the day, just to get sort of a sense of what the vibe is on Wall Street. And so my top 5 stocks today are going to be Foot Locker, up 1.7%. No real news there. It was down significantly yesterday, so I don't read very much into this or any daily moves for that matter, but it can definitely paint a picture. And the picture that we're seeing today is you have Kraft Heinz up 0.8%, Salesforce is up 0.65%, but then you have Church and Dwight up 0.2% and Kroger up 0.4%. And so looking at these companies, 3 out of the 5 are consumer defensive stocks, up around 0.2%. And so this is definitely a defensive day, a risk off day in the stock market. And taking a look at my bottom 5 decliners, a few things of note, some pretty interesting stuff. Wheat and precious metal is my biggest loser of the day, down 3.7%, where Estee Lauder is down 3.5%. You've had a big run up in the price of gold, and so people may be taking profits in this stock. As far as Estee Lauder, this is really a stock that is perceived as being joined at the hip with the economy of China, where about a third or more of their revenues are derived from. But then you also have Walgreens Boots Alliance, a stock that doesn't have the best fundamentals, down 3.3% today. And then you have a more risk asset type stock, Green Thumb Industries, down 3%. And then you have almost down 3% Caterpillar as well, an industrial that would be benefited in times of economic expansion or early market cycles. And so the market is a little bit grumpy today. Again, down about $550 on the day. And so that's our update, our recap on my stock portfolio performance for the day. But let's just jump right into the topic of today's video, which is Pool Corp, ticker symbol POOL, over here on Qualtrum. Now, I'll ask you to like the video and subscribe to the channel, but a note about Qualtrum, this is a suite of software that I pay for to look at stocks, not one I'm affiliated with. So I'm going to leave the description for Qualtrum in the comments below. And as always, if there's a stock or an ETF that you'd like for me to review, you can also leave that in the comments, and I'd be happy to make a video just for you. So starting off, we're going to take a look at Pool Corp. Shares are currently trading for $377, down 1.2% today. And so, what is Pool Corp? Not everyone has heard of it, so I think it would be helpful to just sort of read the description. Pool Corp distributes swimming supplies, equipment, and related leisure products in the US and internationally. Okay, so the company offers products including chemicals, supplies, pools, accessories, repairs, replacement parts for pools such as cleaners, filters, heating pumps, and lights, etc., etc., etc. Additionally, they offer irrigation and related products, and they deal in materials, concrete, plumbing, electrical components, functional and decorative pool surfaces, deck materials, tiles, hardscapes, and natural stones for pool installation or remodeling, commercial products, including heaters, safeties equipment, commercial pumps, and filters. In addition, the company also offers other pool construction and related products comprising discretionary recreational outdoor living products. These products are grills and other components for outdoor kitchens, etc. And so Pool Corp serves swimming pool remodelers and builders, specialty retailers that sell pool cleaning supplies, swimming pool repair and swimming businesses, irrigation, construction, and landscape maintenance contractors, as well as commercial customers that serve hotels, university, and community recreational facilities. As of early 2022, the company had 410 sales center in North America, Europe, and Australia. Headquartered in Louisiana, this company was incorporated in 1993. So here on Qualtrum, let's go over the high-level metrics that matter on this company. A $15 billion market cap makes Pool Corp a large cap stock, although its style is sort of similar to more of a mid-cap growth company. So it's just right there on the edge between mid and large cap, and a little bit more of a growth orientation on this company, which we can definitely see here in its forward multiple PE forward PE of 26 times, which is quite expensive. And so we're going to see if that's justified or not. But we can also see a very healthy free cash flow yield of 5.8%. Additionally, the company does pay a dividend. It is 1.15%, so a bit under the US stock market, but with a really safe payout ratio of only 30%. So let's dive into Pool Corp, I guess no pun intended, and see what we can learn here on Qualtrum and start doing some checks and minuses evaluating this company's performance. So looking at revenue for Pool Corp, over the last 10 years, it's up 11.5%. And you can see a big jump here that happened in 2021 and 2022. There were reasons for that, just sort of in the market and in society, but they also had an acquisition that was completed at the end of 2020 rather. And so I think it's good to look at the revenue growth of this company over different time frames. It's really accelerated in the last 5 years, mostly due to sort of hopefully one-time events and that acquisition. Over the last 2 years, it's grown at 8%. So overall, we can see that there are definitely different catalysts for growth on this company. But this number, 11.5% over the last 10 years, is also going to be balanced with this number of 8% growth over the last 2 years. But most certainly, we have growing top line revenue for Pool Corp. That's going to be our first check mark of the day. Moving forward, I'll ask you to like the video and subscribe to the channel, but let's take a look at free cash flow on Pool Corp. And so the executives are not diluting shareholders too much. There are really low levels of stock-based compensation, which is good to see an investor-friendly company. But we can see really huge, massive jumps in free cash flow. And this could be, kind of why the stock seems to be priced a little bit more expensively. But what we can see is over 10 years, that free cash flow growth rate is 18.5%. And it's really just rocketed to about 42% in the last 5 years. So when it comes to free cash flow, Pool Corp is certainly a green check mark. Now, moving forward, let's see what else we can see. We can see that earnings per share are going up and to the right. Uh, Pretty stratospherically, parabolically in the last 10 years, up 25% for EPS. But over the last 5 years, up 28% on EPS. EPS is definitely something that can move a stock price higher and definitely a metric that is valued by Wall Street. So another check mark for Pool Corp on EPS. Now, looking at cash and debt, what we can see here is pretty ugly. They hold a lot of debt on their books. Now, in an interest rate environment where rates are coming down, which is what's projected to be happening, companies will be punished less for holding debt on their books as interest rates go lower. But what we can see here is um, it looks like, they took out a lot of debt to pay for the acquisition they did in late 2020, but they're or late 2021, I believe, but they're also paying down this debt on a quarterly basis. It seems like they have a pretty concerted plan and effort to pay down this debt, while their cash is rising a little bit. So overall, I can see what they're doing here, but the debt is just a little bit too high for my liking. So this will be a red X mark for Pool Corp, but the trend is definitely moving in the right direction. So let's take a look now at dividends. Again, about a 1.1% dividend yield. They have really nice growth on their dividend, about 20% over the last 10 years. So you'll definitely outrun inflation looking at your dividend increases for Pool Corp. And sitting at only about a 30% PE ratio, with this strong growth in dividends, Pool Corp is going to earn a green check mark in dividends. Now, moving forward, let's take a look at shares outstanding for Pool Corp. Um, they are buying back shares, which we love to see. They're buying back shares at about 1.76% a year over the last 10 years. And it looks like that buyback of shares is kind of accelerating. So I really like to see this. Shares bought 5 years ago would mean you own a larger percent of the company today. And if that trend continues, this is definitely a company that is seemingly very investor friendly. So this is going to be a green check mark on shares outstanding, which are going down. Now, let's take a look at ratios on Pool Corp. So this is super duper important. What we can see here is a massive return on capital employed over the last 5 years. That median number seems to be somewhere around 33%. This is a massive check mark. When they take out debt, as they have done, or when we buy their shares, they convert that into profit at a really, really high rate. So definitely a check mark on profitability through ROCE. And looking at profit margins for Pool Corp, this looks absolutely fantastic. So their bottom line margin has grown from around 6% to 9%. And now with the acquisitions made in late 2021, we're seeing a pretty steady bottom line profit margin of around 12%, which is fantastic. So another check mark here on Pool Corp for bottom line profit margin. Looking really good so far. Like the video and subscribe to the channel. Now let's dive into this some more. As the PE multiple, the earnings per share on a historic valuation is low. So this is swan diving off a diving board down lower. And Pool Corp is currently trading at a discount to its historical PE multiple. That's going to be another check mark on Pool Corp, this sort of mid cap growth company. But let's take a look at one more thing here. We have a CEO named Mr. Peter Arvan. And let's take a look at what insiders are doing with shares. And so, what we can see here is that the CEO bought $200,000 of shares in his own company at $387. The stock price is currently less than that by about $5. And so, remember, the only reason that executives on a corporation's board buy shares is because they believe that the price is going to go up. And now, when you see the CEO himself buying shares at a price that's higher than today's price, that's a very bullish indicator. So that's going to be a massive green check mark on insiders buying shares at Pool Corp. So now let's move forward. Let's do a little bit of background on what's going on with Pool Corp. So uh, in late 2021, Pool Corp completed their acquisition of several companies. What we can see here is they paid $790 million to acquire some different companies. So they acquired uh, Poor Pies Pool and Patio, if I'm saying that right. And that also includes some different subsidiaries, Sun Wholesale Supply and Pinch a Penny. And so they paid about $800 million or nearly $1 billion for these companies, and we can see that back here, with it closing in late 2021. We can see that they took out this debt, in these years, and they had debt levels of around 1.1 billion. So that's where that 790 or so million dollars went to acquire those companies. And it looks like that acquisition has grown top line revenue, and definitely helped to expand profit margins. So that looks pretty all right to me. Now we're ready to get to our rough DCF estimate on Pool Corp. And what I'll say is that we have a $376 stock. So we should get an idea of what its shares might be worth per share based on the data we got here from Qualtrum. And so, averaging free cash flow over the last 5 years, I'm seeing $275 million a year in free cash flow. Uh, as of the most recent quarter, they have $85 million cash on hand with $911 million of debt. They're doing a nice job paying that debt off. We can see shares outstanding at 39 million. And then we had those growth rates historically of around 11% over the last 10 years. To be conservative, I put their growth rate going forward at 9%, up to year 5. Year 6 through 10 is 5%, and then a terminal growth rate of 3% with a 10% discount ratio. $377 stock. My estimate of its fair value is only $121. And so, yeah, you're looking at a mid cap growth company here. People are assigning a really high PE multiple to this company, and so they have to absolutely execute on revenue growth and earnings per share growth. Let's go ahead and just do a little bit more of an aggressive valuation. I'd like to keep my, you know what, we'll do the whole thing. We're going to just sort of turn it up a little bit and see if we could expect better results. So if you were to change the discount rate and increase their top line revenue growth, you could see a value that's still lower than its fair value, but that's $232. So let me go ahead and average 232 plus my previous number value of 121. So 232 plus 121 uh, equals an average of 176.5. And so why am I kind of second guessing myself here? When you have a pretty big United States based company that's trading so far away from its fair value, and you have insiders buying shares, I want to ask myself, what what if I'm wrong? What if I'm looking at this the wrong way? And so seeing such a big divergence and seeing this company is seemingly so overvalued, I went ahead and averaged my two assumptions for free cash flow for a fair value, but I'm going to go ahead and use two other resources. So I've gone ahead and done some custom inputs here over on Guru Focus, looking at growth of 8% over the next 10 years and a terminal growth rate of 3% based on free cash flow. They show a fair value of $332. And then also looking at alpha spread, we can see based on free cash flow, they have a projected fair value of $265. And so we're going to go ahead and average these three numbers up. And after averaging these three figures up, I'm showing a fair value of approximately $258. And so I see this company as being overvalued. But if they have higher top line revenue growth, they continue to pay back their debt and interest rates move substantially lower, the delta between price and value could converge. And there's definitely a scenario where this company's higher in 5 years, but that's also not guaranteed. So this is Sean, not financial advice. As always, if there's a stock or an ETF you'd like for me to review, go ahead and drop its ticker symbol in the comments below. Thanks so much for stopping by, and I will see you on the next one.